Hi, my name is Andrew Tate. I'm the Head of Restructuring and Transformation at Kreston Reeves, and I'm very pleased to be recording this webinar regarding support for businesses in the current crisis. So this is me. I've had over 25 years dealing with restructuring businesses, very much focused on business rescue, and I think that the skill set that I have and my colleagues within the Kreston Reeves restructuring team are very well placed to try and help businesses through this very difficult period of time. Our focus is very much on value retention and recovery, and I really want to talk to you about some of the support that is there for businesses and helping businesses through this current difficult situation. So where are we headed? Well, the lockdown is set to continue as I record this. We haven't yet had any confirmation from the government that the lockdown will continue, but that certainly seems to be the expectation. It certainly also seems to be the expectation across the world. Within my role, I do talk to businesses and professional practices across the world, and very much we are seeing the same situation in many countries. At this point, businesses have been in lockdown, the country's been in lockdown for some time, and so businesses have already had an opportunity to think about their resilience, where their business is, and many businesses have taken the step to try and mothball their business. The government has obviously offered many support measures, but these are still evolving. There are still new details coming out, changes to the government policies which are being presented, and all businesses and professionals are having to constantly watch out for changes and to look at the detail. The detail is incredibly important. When one looks at the headlines, they don't necessarily correlate too closely to the actual detail behind all of these measures, whether it's the job retention scheme or whether it's loans from banks. We really have to drill down into the detail and make sure that we understand them. And the exit from lockdown is not yet clear, which provides a huge amount of uncertainty for businesses. We don't know whether it's going to be a gradual release from lockdown, how long the social distancing is going to take. And so this is something that we need to battle with. So the future looks uncertain. The rest of the world is in the same position. And there is a lot more talk nowadays about recession. Certainly within the last few days, there's been some projections made which show that there is going to be a world recession, and certainly the recession in the UK is being talked about very actively now to ensure that everybody is aware of this. And there will be some winners and losers, and very much we hope that our clients will be winners and will be able to survive this. We will do whatever it takes were the words that came from the government, from Boris Johnson, from the Chancellor at the outset of this virus crisis. And they have announced a huge range of expansive measures to support businesses and individuals. Some of these measures are grants and some are deferral of liabilities. And there is a really important distinction between the two. A grant is money which is given to a company and it never has to be repaid, which is fantastic. However, where there is something like a loan or a deferral of liabilities, as we have with some tax liabilities, these are simply pushing liabilities into the future and building up the debt of a company. The most valuable, I would say, is the job retention scheme. This is a grant by the government to help businesses to be able to continue to pay their employees when actually there is no work for the employees to carry out. There has been an awful lot written about this, and detail is now emerging on precisely how it will work in practice. So there is a lot more detail about employee and employer rights during a period of furlough. There is quite a lot of concern and therefore quite a lot of text about holiday accrual, where how employees who have been furloughed, who are not actually working in the business, but are still employees of the business, continue to accrue their holiday. And this will have to be taken at some time in the future and will be effectively a liability which the business has to carry forward once the furlough period has ended. There's also been some clarification how employees can actually find other work during the furlough period. This was quite uncertain when the government originally announced the scheme, but certainly it's been clarified that employees can seek other work during the period of furlough with their employer's consent. There's also very recently further details on how to make a claim. The claim is made to Hmrc, and a portal is to be opened in the next few days to enable businesses to record which of their employees has been furloughed and to make their claims for repayment of money which has been paid to employees which have been furloughed. We don't yet know how quickly claims will be paid, and that is going to be really important for businesses. We have been told that the portal will be open on the 20th of April, and in theory, this should be sufficient time for Hmrc to be able to get funds to employers ready for the April payroll, but it will be tight. The other big question is whether furloughing will be extended. At present, furloughing ends on the 31st of May, and there is a great question mark as to whether furloughing will be extended. And this is really important at the time that we are recording this webinar, because actually if employees, for example, cannot be kept in gainful employment after the 31st of May and furloughing is not extended, employers may have to make redundancies. And where there are over 20 redundancies envisaged, then a consultation period with employees of 30 days needs to be carried out. And if there's more than 100 redundancies, then a consultation period of 45 days needs to be held. So the time is running very short for the government to announce as to whether furloughing will be extended into June. Otherwise, businesses who cannot afford to pay their employees if there is no work to be done in June may have to start making redundancies and starting that process. So another of the big announcements by the government is the Coronavirus Business Interruption Scheme. And this was announced a few weeks ago now. It is a government-backed loan scheme where businesses can speak to their banks, and there's a number of other banks that they can speak to as well, to obtain a loan from the bank, which is backed by the government to 80%. Businesses have had an opportunity to discuss this with their banks already, and there's been a huge take-up of this scheme, with businesses completing the application form to get this loan. The scheme has evolved. Again, the government have rethought their policy, having made some initial announcements, and in fact, the original scheme that they announced was restricted to businesses with up to £45 million of turnover. One of the big developments in this is that the government has actually extended the business interruption scheme to businesses up to 500 million turnover, but the scheme is slightly different for businesses that are over 45 million and up to 500 million, because the details of this have not yet been provided. So we're still not sure exactly how this is going to work, but certainly the same mechanism applies, where businesses will be applying for this through their banks. With the smaller business scheme, where we do have a lot of detail, the provision of these loans are very attractive. Arrangement fees and interest for the first 12 months are waived, and it's a really attractive package. However, the bank has to approve the loan, and the bank has to approve the loan on a commercial basis, knowing that there is a reasonable prospect that the business is going to be able to pay any interest into the future and repay the loan ultimately. The banks have been put in a difficult position, there's no doubt about that, and they are trying to respond quickly and positively to the introduction of this brand new scheme. They've worked very quickly to get details onto their website, and clearly they will be having to respond to any changes which come through as well. The government guarantee is not often fully understood. So the government guarantee at 80% is only actually comes into play if the business which is lent the money fails, i.e. goes into an insolvency process, and the bank that has lent the money does not get all of its money back from the assets within the business and any personal guarantees that might have been given by the owners. So the 80% which is paid by the government is only paid when the company has been placed into an insolvency process. All of the money that could be recovered from the company has been paid over, and the government then pays 80% of the final loss that the bank suffers in that situation. So many business owners, when they first hear about this scheme, think that they have only guaranteed themselves the 20% of the loan, which is not guaranteed by the government, but that's not the case. They've guaranteed, or the company has undertaken to repay the whole loan, and it's only if the company falls onto hard times and can't do so that the government steps in. Another interesting aspect of this is that the interest rate that can be charged by the banks has not been capped. And so we haven't yet seen a lot of detail about what interest rates the banks are charging, but they are likely to assess the interest rate based on the risk inherent in the business, in the situation that the business is in. The applications for these loans are complex, often 5, 6 or more pages, and decisions for lending of over £250,000 is likely to be quite lengthy due to the volume of applications. Again, in the news, we are seeing a lot of pressure on banks who are trying to process all of these applications, but each one has to be gone through on an individual basis, and it is difficult for them. Another controversial area is personal guarantees. Personal guarantees cannot be requested in respect of these loans for loans under £250,000. But over that amount, personal guarantees can be requested by the bank for some or all of the lending. Projections as to how a business estimates it's going to come out of the current crisis, and a good business case is key. The loans will be based on the performance of the business before the virus crisis hit us, but it is important for businesses to look into the future and have projections as to how they are going to recover from the crisis. Other measures which have been announced by the government, there are grants made to businesses by local authorities. Again, these were announced a few weeks ago. We understand that eligible businesses have already received these grants directly into the bank accounts. They don't need to do anything to justify these. Business rates. Business rate holidays have been given to certain businesses, and again, businesses such as retailers and other businesses similar to that, where they are entitled to a business rate holiday, they're being contacted by their local authorities automatically, and they don't have to do anything, provided that the local authority has got their records and understands that they would be eligible. Hmrc and Customs, they're obviously a very significant stakeholder in many businesses, and very early on, Hmrc and Customs announced that businesses didn't have to pay the VAT, which was due in the quarter from the 1st of March 2020 to the 30th of June 2020. We also have experience of businesses applying for time to pay arrangements with Hmrc. This is essentially where a business contacts the Hmrc to request time to pay current liabilities, and we've seen them be given 3 months to pay any current liabilities with a minimum of formality. A longer period to repay a liability does generally result in further inquiries from the revenue, but not a really heavy level of detail. There are some preconditions to picking up the phone to HM Revenue and Customs and asking for time to pay. Generally, the application will be much more favourably received if current returns have been submitted to Hmrc and the business is up to date with its VAT and its tax returns. Generally, the business needs to know what it's offering. Hmrc will not provide an answer to the question, how much must I pay? The business should be going into the conversation saying, I can afford to pay X pounds a month based on my projections. And it is important to remember that when a time to pay arrangement is being requested, that actually part of the deal is that future payments and future tax returns will be paid or submitted on time. So that's really important. Finally, just to mention landlords. Obviously, many businesses rent properties, and landlords are very keen to be paid the rent and for rent to keep on being paid. Most landlords have been helpful. The government at a very early stage requested landlords to be helpful to their tenants and to understand the situation. And most landlords are being helpful. Some have given rent holidays, so a deferral of rent for the current quarter, and have pushed that back to a later date. And in some cases, landlords have actually waived the rent for the current quarter. So this is really helpful. The government also took the step of banning the eviction of tenants for defaults on rent between March and June. However, landlords can take other action, and there have been stories of landlords who have issued statutory demands. And these are demands for a business to pay, which, if they're not met, actually can result in the landlord presenting a winding up petition against the company and having it declared insolvent. So there are other steps which a landlord can take, and very much businesses should be speaking to their landlords on a very regular basis to keep them up to date on how they're feeling about the business, and to make sure that they are communicating with them as to when payments of rent will be able to be paid. So we thought it would be helpful to just have a look at what businesses should be considering as we go through this very uncertain period. And I think one of the key considerations is what the recession will look like. We have been told that there will be a recession as a result of this, and very recent statistics show the economy falling by 35% as we come through this, and unemployment soaring. So for any business owner looking at their business and thinking about how it might come out, it's very important to look at the demand which you have had from your clients and your customers in the past, and trying to anticipate whether this is likely to come back as a very sharp increase with pent-up demand. Many businesses do believe that there will be pent-up demand. An example of this would be hairdressers and barbers, which are closed at the moment. People will want to get their hair cut shortly afterwards. MOTs as well for cars have been deferred, so there will be a pent-up need for cars to get their MOTs. So some businesses will come back very quickly, and then hopefully their demand will return to what it was before. But there will certainly be perhaps more luxury items where discretionary spend will be held back by consumers, and so a recession and the exit from the lockdown may be much more difficult out for luxury businesses with high-end expensive products. Certainly with business to business contacts, it will be important to understand what sort of recovery will come there. And I think when considering what the recession could look like, it's also important to think about consumer spending and the availability of money within the economy to be able to pay for goods like holidays and travel. I personally think that if employment is going to soar, then people in the world and in the UK will be very cautious about making expensive purchases further down the line, and that will probably take some time to recover until they feel confident again. So it's well worth thinking about the demand curve which a business has. It's really important also to think about clients, to keep close to clients during this time of uncertainty, to make sure that the clients know what's happening with your business, if they are key customers, and just making sure that there is a very close relationship and contact maintained with them. Certainly, it is worth also thinking about clients that you want to service in the future. This time of lockdown is an opportunity for many businesses to take a step back, to think about what their business model needs to be going forward, and so thinking about the ideal clients, the clients that are going to be most profitable, will be extremely helpful. Really focus on the clients that are going to produce the most regular demand, perhaps the best margins for the business into the future, and think very carefully as to whether loss-making clients or clients where the return is marginal, whether the business should continue to service those clients. Working capital is obviously absolutely vital at the moment as well, and will be coming out of the lockdown. So at the moment, businesses are very much in the field of trying to make their working capital, their cash in the bank, and their other working capital elements, such as the money that they're owed, their debtors, and money that they owe their creditors, and things like stock reserves. So businesses need to work with the capital that they have in their business and make sure that they conserve cash as much as possible because of the uncertainty that we're all facing. So it's very important that businesses look to maximize their working capital, perhaps by collecting in debts as much as possible, by delaying payments to creditors and communicating with them the reason why that is happening, so that they can conserve cash. But it's also important for businesses to think about how they will come out of the lockdown and what working capital will be required, what cash will be required after that to be able to pay for new stock, to be able to hire new people, and also to be able to pay off the debts which have accumulated during the period of mothballing a business, if that's what's happened. The lockdown is also a time to think about innovation. It is very much been said that businesses will come out of this with a very different mindset. We've all been forced to consider remote working. We've been forced to move away from our business premises, and for some businesses that will be a game changer, and businesses will need to think about how they're going to actually operate into the future. Innovation will be greatly encouraged during this time, and business people again have this lockdown period to be able to think about how they can make their business better, more resilient into the future, and to a certain extent thinking about what can be automated and where costs can be saved. The advent of online communication channels such as Zoom is a great revelation to many businesses, that actually these conversations, and very effective conversations, can happen without actually getting people in a room together. The financing strategy of the business going forward is really important as well. With the anticipation of a recession around the corner, wherever possible, businesses that are highly leveraged, lots of borrowing in the business, would be well advised to try and reduce some of that borrowing so that they are not so much at the mercy of high interest payments and very strict bank covenants. When a business is looking towards the future and how it's going to finance the business, it's also worth thinking about where is wise to invest, what investment could be raised during this time, and part of that is to seize opportunities coming out. The crisis has created a lot of financial harm, as well as obviously the tragedy of a number of deaths arising from the virus. But where businesses do fail and businesses do get into difficulties, there are opportunities for other businesses to come in and either to be able to pick up market share as a result of that, or maybe actually to refinance businesses that have got into difficulty and run them more efficiently into the future. Again, within the strategic hat on, cutting costs is going to be an important consideration going forward. Businesses will have to come out of this much leaner because probably demand will be down, and that reduction in demand will follow through for some time. So businesses will have to think about their cost base, their overhead base, thinking how they can cut their costs. And one of the interesting aspects for this will be properties, where people have been forced to work from home and work agilely. I think that there will be a re-evaluation of whether businesses actually need properties in the same way that we have traditionally thought about these. A helpful tip that I read some time ago is to think about your business in the context of a sale. So if you were grooming your business for sale, this is a very good context to think about in terms of running your business. And it makes you think about all the different elements of a business as if you were a purchaser of the business coming in and really examining the business to see where its weaknesses are. So I think that's a really good context to think about your business during this period of lockdown. You don't have to intend to sell your business, but it's simply a good mindset to get into, to think unemotionally about the business. And finally, it's useful thinking about the supply chain resilience into the future. Your business may come out of lockdown and there may be a lot of demand, pent-up demand, which comes through. But ultimately, are you going to be able to get the supplies that you need to be able to fulfill that demand? And on what sort of terms are suppliers now going to be looking at that? So that is a really important element of this that we all need to be considering. That's all I wanted to say for the time being. I think there is no substitute for brainstorming and talking about what the strategy could be, and talking to professional advisors who've got a number of clients, and we'll be having similar conversations where there can be knowledge sharing between the clients and the client situations. But certainly, even if it's a board of directors or shareholders or investors, or even the bank, it's worthwhile having the conversations about what your business should look like coming out of this, and what you really anticipate with a very cold eye, what you anticipate the world will look like for your business going forward. I wish you all the very best in this period of lockdown, and I hope that you all stay safe. Thank you very much.